Now we have a very similar setup. Gold is up significantly. It's up over 50% in 2025. People are like, wow, that was crazy. But it looks like it's peaked and starting to cool off now. And all of a sudden, you're now starting to see Bitcoin get a little bit of momentum to it. And so the question is, or what people are insinuating is there some relationship where once gold runs first and then it peaks and starts to cool, is that the catalyst for the Bitcoin, right? The great rotation from gold to Bitcoin.
For veterans of the 2020 cycle, that setup sounds familiar. Gold screams first, signals stress in the system, cools off, and the capital that still wants protection starts hunting for something faster, harder, and more asymmetric. That pattern, once dismissed as coincidence, is now turning into a playbook for serious macro money. When you line up that rotation with what is happening under the hood in crypto rails, stablecoins, and tokenization, it starts to look less like noise and more like a structural signal. The argument is simple. The conditions that preceded Bitcoin's last explosive repricing are not just rhyming, they are reloading.
Gold basically peaked and then it cooled, right? So gold had this big run up, kind of ran first. And if you remember, let me set the scene in 2020. If you go back to March of 2020, asset prices sold off aggressively because there was a liquidity crisis. I think March 12th was the big day that Bitcoin went down 50%. And I was curled up on the couch. I just don't feel too good. But then all of a sudden, here comes the monetary bazooka, right? Trump was out there posting away on social media. You had the Fed stepping in. You had fiscal policy. They were printing trillions of dollars. I remember tweeting saying you can't print trillions of dollars and not get inflation. And people were like, you're an idiot. You don't know. Inflation is transitory, all this stuff, right? Obviously, what happened is we got this massive recovery and everything took off.
That first signal was born in chaos. Gold ran as the old world's alarm bell, then stalled just as institutional legends began validating Bitcoin as the aggressive hedge on unprecedented money printing. What followed was not a gentle trend, but a violent repricing of what sound money meant in a digital age. That historical pairing of gold exhaustion and fresh conviction in Bitcoin now serves as the backdrop for today's thesis. If the same rotation is forming again while the rails themselves mature, you are not just watching a price pattern, you are watching a much bigger machine switch gears.
If you look at the transformation of financial markets, we had analog assets. We had physical dollars. We had physical stock certificates. We had physical deeds to your home, right? We had physical bonds. Used to literally, right? It used to be a thing. You would put it in your filing cabinet. It was crazy. Then we transitioned to an electronic world, and every physical asset became an electronic QSIP. Those electronic QSIPs now get whipped around these centralized databases, and that is what we know as finance today. So there was an analog era that transitioned to an electronic era. If you go back and you look at things I wrote almost a decade ago now, I talked about we are on the precipice of a change where we went from analog to electronic. We're now going to go from electronic to digital.
Underneath the charts, the structure of money is mutating. The shift from analog paper to electronic databases turned markets global and fast, but still locked inside closed permissioned systems. The current jump from electronic to truly digital is different, because now the assets themselves can live on open programmable rails. Bitcoin is not a side bet on that shift. It is the native asset of it. When a proven macro signal like gold cooling off coincides with this structural migration, it upgrades from a trader's pattern to a thesis about where value has to flow.
And so what we're now going to see is every single one of these electronic assets going to transition into a digital asset. So you're going to see stocks, bonds, currencies, and commodities all get tokenized. But the thing that people don't realize coming out of the hardcore crypto world, where there's lots of tribalism and controversy and shitcoining and all that kind of stuff, is this is just taking the exact same asset that already exists, and it is just changing the form factor someone's going to hold it. So rather than have a physical stock certificate or an electronic stock certificate or a share, you're now going to have a digital one. it's still a stock certificate. So you have to underwrite the underlying asset itself. Is this a good company? Is it a bad company? Am I being diluted? Do I have a claim on cash flows? Am I going to get dividends or not? All that stuff is actually the analysis.
Once you realize tokenization is not a gimmick, but a new form factor for the same trillions, the picture sharpens. Every asset dragged onto digital rails shares liquidity, speed, and global access with Bitcoin, but only one of them is credibly fixed in supply. When traditional platforms plug into this world, they are not just adding a new product line, they are quietly normalizing Bitcoin's proximity to everything. A rotation out of saturated hedges into a hard-capped digital bearer asset becomes the logical next step, not a fringe move. The so-called bull run trigger is not a magic line. It is a convergence of rails, assets, and incentives.
What we need is we need the crypto industry to infiltrate finance, and it just needs to be finance. It needs to be exchanges. Coinbase, in the interview with Max, they're talking about being the everything exchange. Amazon, the everything store. These guys want to be the everything exchange. They want to be able to trade public stocks, crypto, probably want to do like real estate stuff, tokenized, assets, whatever, prediction markets. Everything gets traded on one exchange. Guess what? ICE, New York Stock Exchange, NASDAQ, CBOE, all those guys. What do you think they want to do? They would love to be able to do prediction markets, tokenized securities, traditional securities, all the bonds, right? Crypto. It's like that is where everyone is headed. And so I think that we are going to go through a complete revolution in really boring nerd infrastructure. I think for the consumer, all they're going to see is things got faster and cheaper. That's how technology adoption works. And
when crypto disappears into the background and everything just lives on unified exchanges, the volatility narrative changes. Bitcoin is no longer an outsider fighting for a seat. It is one of the core assets on the menu. In that environment, macro rotations can move quickly and in size because the plumbing no longer slows them down. The bull run signal strengthens when the pipes are finally ready for real capital. That is exactly what this infrastructure revolution is building toward.
I think we are like right on the edge now. You're going to start seeing some of the stuff hit. And as it hits, you're going to start realizing, wait a minute, I can get higher yield. Wait a minute, I can trade on weekends. Wait a minute, I can actually be outside the United States without a bank account, and I can now start to earn yield via a yield-bearing stablecoin, right? Wait a minute, I can store my economic value in an asset that has sound money principles that seems to benefit from the debasement of the currency, aka Bitcoin, right? That whole transition over the next 10 years or so means that the digital natives, they're just early to what the rest of the world's going to be using. And I think it's very, very bullish for the companies that are embracing this stuff.
Utility is no longer hypothetical. The ability to move value at any hour in any country with yield and without permission pulls people onto these rails for reasons that have nothing to do with speculation. Once they are here, the leap from stablecoins to Bitcoin is not ideological. It is practical. In previous cycles, price ran ahead of fundamentals. This time, the fundamentals are quietly turning into on-ramps. That real-world stickiness is part of why this recurring gold to Bitcoin signal carries more weight now than it did the first time.
So they have really gone for, let's go outside the United States. Let's go find where the biggest delta is. Let's serve those customers and have this kind of financial inclusion. Now, from a United States standpoint, we should love Tether, right? I've said multiple times that I think that the guys at Tether, they're essentially American heroes. Who else do you know who has gone around the world and created more adoption of the US dollar, has extended the Americans' way of life as having the US dollar as a global reserve currency in the way that Tether has? Almost nobody. Right. And so from that standpoint, that is quote unquote heroic for America, for us to continue to have dollar dominance extended in that manner. So I think that's great.
Stablecoins quietly taught hundreds of millions of people how to live on digital dollars without ever reading a white paper. That same habit builds comfort with non-bank custody, on-chain transfers, and 24/7 markets. In other words, the training wheels for a world where Bitcoin is not exotic, just the harder asset on the same rails. The bull signal is not just that gold looks tired, it is that the alternative is already culturally and technically installed. When liquidity finally looks for maximum protection and upside, it tends to follow the path of least resistance.
And so what you are watching is you are watching the like tectonic plates of finance shift right now. And everyone's trying to figure out where are they going to end up. And there's a little bit of musical chairs, like everyone grab a partner, right? But there's also a little bit of direct competition. And there's also some business strategy into it. So it's fascinating. The reason why all this is happening is because there's probably, in my estimation, about $1 trillion of value up for grabs. Who wants it? Everybody wants it. And that's why you're seeing, kind of the competition and the developments that you're seeing. And so it just goes back to DeFi mullet, right? You are going to be using stablecoins at some point in the next 10 years and you're not even going to realize it. All you know is you're moving dollars. And that's actually probably a good thing. That is how the technology gets adopted.
When $1 trillion of value is openly up for grabs, the winners are the assets and rails that best align with that scramble. Incumbents rushing into tokenization, payment giants launching chains, sovereigns experimenting with balance sheet strategy, and users already fluent in digital dollars all create a flywheel. In that contest, Bitcoin sits as the neutral, programmatic, non-sovereign reserve at the center of an increasingly tokenized map. When macro conditions hint at a rotation and the structural pressures all lean in the same direction, the phrase bull run trigger stops sounding like clickbait and starts sounding descriptive. We have seen how the exhaustion of a major gold rally once preceded a historic Bitcoin surge, and how that same pattern now appears against a backdrop that is far more mature: tokenized assets, stablecoin rails, everything exchanges, and $1 trillion fight to control the future of money. We have traced how these boring nerd infrastructure shifts make it easier than ever for capital to slide from legacy hedges into a digitally native store of value without frictions or fanfare. We have watched stablecoins spread dollar rails worldwide, conditioned users for 24/7 markets, and quietly set the stage for Bitcoin to benefit when trust in old systems wobbles again. Put together, that is the core of the claim that a 100% accurate bull run signal has just flashed. The same rotation setup, now supercharged by stronger fundamentals and deeper rails.
I don't like to extrapolate off of, kind of one single data point. But when you line the charts up, it looks awesome. It looks like Bitcoin will go up. So let's see what happens.
Do you think this repeating pattern and new digital infrastructure truly justify calling this a 100% reliable bull run signal? Or is the market about to remind everyone that nothing in Bitcoin is ever guaranteed?